live. All right, y'all, we live.
What's up, family?
What's going on with everybody, man? Everybody straight, everybody feeling good in the comments and the chats.
Hope everybody had a good weekend.
Yeah, for real.
It's gonna be an interesting week, so hope everybody did some studying.
Man,
Not too much,
listen,
You gotta
all
be
I'm
balanced
worried
out
about
here.
right now is these little kids that don't mess around. You know, you feeding them and they hit you with a now I got the it's not the right season to have that, man. It's not the time to be trying to toss around little coughs mid-air and stuff. I had to be diligent and make sure you cover your mouth when you cough.
You feel me? Right there.
Man, because school about to start, y'all is not finna get sent home and make me be the teacher. I know that much. But nah, what's up with y'all though? It's another episode. This is actually the last episode for the first round of the Sector Sundays Bull versus Bear case. We got my man Vic, my man David. They actually the first ever to do a 1v1. You feel me? They partners. You know, I don't have the energy to call no names today. I'm gonna let them live. You feel me? But this was very, very difficult to put together this last group. So make sure y'all show some flowers before. I don't even care if they presentations is trash. Make sure y'all show them some flowers just for at bare minimum showing up and being willing to participate in this, because I know it's on the big stage, the lights, the cameras is on, it's recorded. Everybody's not, equipped to do that. I feel you, but just make sure y'all shout them out. If you haven't seen any of these before, you can go back and watch the previous ones. Essentially, it's just a bull bear case. From each side, they have 15 minutes for initial presentations. And then they're going to have a 3-minute, a 2-minute, and a 1-minute rebuttal. After that, we'll put up a link so y'all can vote to whoever wins. Whoever wins will move on to the next round. Did we already say who won that 1 week, AJ, before Q did his segment?
Yeah, it was the Neo Bears, right?
Yep, that's right.
It was MJ,
the
Kevin.
Bears. So MJ and Kevin definitely is going to the next round. They will be facing whoever wins tonight. And then next week, we actually start the semifinals. We got Leah and Dave versus
Lori and Sam, right?
And Sam. Yep, Lori and Sam. Whoever wins that will be going to the finals. So make sure y'all tune in next week. Those two teams is some man. They every single time they get on Sector Sundays, all four of them bring the heat. So next week is definitely going to be something to watch for. We're doing Coinbase. So it's a newer IPO, but it's one that it's getting a lot of action, and it's at, a fairly decent price compared to what it IPO'd at. So if y'all need some due diligence on that, make sure y'all show up to that one. I don't want to take up too much time. AJ, did you have anything to tell the people before we get started?
Nah, bro, you covered everything tonight. Just make sure y'all do show them love, though, because it is hard getting people. So,
for real,
and if you are one out there who wants to volunteer and just get better, please let us know.
Yeah, let me know. I do have a couple people that didn't get to go this time that hit me on the side like, hey, I think I'm ready. So we're going to have some more, stuff. It may not always be a tournament. It may be something else. We like to switch it up. But yeah, definitely hit me or hit AJ or hit somebody come up related that and we'll definitely get you in. Did we decide on who's going first?
Yes, we got Vic going first, representing the Bull squad.
All right, Vic, the floor is yours. Whenever you start, I'll start the timer.
All right, so my name is Vic, and I'm gonna be your Nano Dimension Bull today. So who is Nano Dimension? So they were incorporated in the state of Israel in December 1960. They're a leading provider of intelligent machines for the fabrication of additively manufactured electronics, also known as AMEs. And basically, we are disrupting and redefining how electronics are made. Our vision is to transform the electronic sector into an environmentally friendly and economically efficient and additive manufacturing industry and enable a one production step conversion of digital designs into functioning devices. And our mission is to build an eco-friendly and intelligent distributed network of additively manufactured self-learning and self-improving machines. Just a brief overview of our executive team. We have Yoav Stern, who is the CEO and chairman, who has a proven track record spanning decades in operating roles such as CEO and chairman. He has built several successful companies from humble beginnings through effective strategies and strong execution. We have Zivi Nadivi, who is the president. He's been the CEO of several technology companies, including Cyilluminate Technologies and Kelstrom Industries. While he was at Kelstrom, he grew the company from 8 million to 330 million in revenue over a 5-year period. We have Hanan Gino, the CPO and head of strategic mergers and acquisitions, who is a former president of Verent Systems Incorporated and CEO of Verent Systems Limited, where he grew the business from 200 million to 400 million. And we also have Ziki Peled, the COO, has operated in roles as VP, President, CEO, GM, and COO within multiple companies such as Apollo Networks, Elbit Systems, and Flash Networks. And last but not least, we have Yael Sandler, the CFO, who has extensive experience in financial leading roles and operations. And prior to joining Nano Dimension, she's held various positions at KPMG, where she gained a wealth of knowledge in pursuing IPOs. And she is also certified as HEPA in Israel. So we got some heavy hitters on our team. And just a brief overview of the 3D printing industry. It's the process of making a 3-dimensional solid object from a digital model using an additive process where successive layers of material are laid down in different shapes. And additive manufacturing is approaching an inflection point through a worldwide commitment to Industry 4.0, aka the 4th Industrial Revolution. And we know that because leading companies in aerospace and defense, dental, cosmetic, and apparel footwear have made substantial investments to enter the additive manufacturing market. And it's our belief that 3D printed smart connected products are the next phase of Industry 4.0. And these products include satellites, sneakers, smart cars, and IoT devices, just to name a few. But there's a problem here. The traditional PCB and high PED manufacturing process is slow. The conventional printed circuit board, also known as PCB, is a board containing a pattern of conducting material, which basically becomes an electric circuit when electrical components are added to it. And these are what's used to interconnect electronic components. And high-performance electrical devices, aka high PEDs, are also manufactured with PCBs and reduce the total size of them while freeing up surface areas for mounting other PCB components. But one of the main issues with this process is that you have to outsource the manufacturing. And this time that it takes, it can take anywhere from weeks to possibly even months. And as we know, the life cycle of modern products is shortening and the need for rapid prototyping is increasing at an ever-increasing rate. And another issue with the prototyping process is confidentiality. Using those outsourcing services forces developers to share design files for those PCBs months before the product reaches the market. But we have the Dragonfly LDM system. This is the first and only precision system that produces PCBs, radio frequency antennas, sensors, conductive geometries, and molded connected devices through custom additive manufacturing. Through this product, we are targeting the smart electronics market that rely on the above components as well as the Internet of Things. And so far, we have sold 61 systems worldwide from 2018 to 2020. And just to give you some key advantage of the system, it reduces development cycle times, enables on-site prototyping in a matter of hours instead of weeks. So you want to go shopping and come back, you have your prototype ready, even for complex designs. It eliminates the need for large order minimums and it enables the ability to discover design errors in early development stage with agile rapid prototyping. It enables the retention of sensitive IP in-house during development and eliminates concerns and costs related to IP infringement. It also limits the environmental impact through optimized design, size, and weight, and reduces waste with additive manufacturing capabilities, and also enables long interrupted runs with minimal supervision, which is designed to improve overall throughput of the system, while you also have the automatic print head management mechanism and algorithms allowing for uninterrupted printing with minimal print job setup and preventive maintenance. And we also have some supplementary products that also come with those printers. We have conductive ink, which is basically a liquid ink that contains nanoparticles of conductive materials such as silver and copper. This allows us to take advantage of inkjet printing technology for fast and efficient printing while maintaining the transport properties and electric conductivity of nanoparticles. We also have our dielectric ink, which is basically an ink that contains materials that are not electrically conductive. The use of these inks are crucial in the production of multi-layer circuit boards because it can withstand high temperatures without distorting its shape, which is absolutely necessary for professional PCBs and electronic components. And we also have software that comes with our products known as the Dragonfly and the Switch to manage the design file and printing process. And just taking a brief look at the market opportunity, based on some simple research, our Technovios market research analysts predict that the total PCB market will grow at a compound annual growth rate of more than 6% by 2021. And other estimates say that the PCB market will reach an estimated 72.6 billion by 2022. Within the total PCB market is the more specific market of PCB design software, in which that there are forecasts that it will increase at a 12.9% compound annual growth rate from 2016 to 2026 and reach 4.75 billion by the end of 2026. And additive manufacturing industry analysts predict that 3D printed electronics is likely to be the next high growth application for product innovation, with this market size forecasted to reach approximately 2.4 billion by 2025. To give you a better visual, to looking at it for the additive manufacturing and 3D micro printing market, looking from a top-down perspective, we have 300 billion as a market for microelectronics, optics, semiconductors, sensors, medical devices, growing at a rate of about 5%. And from the bottom-up perspective, we have the micro injection molding, micro CNC, micro laser cutting, and EDM, which all combine to form a total addressable market of about 15 million, growing at a compound annual growth rate of 20% by 2025. And then taking another look at our competition, or lack thereof. Many companies do provide 3D printing services, but they concentrate their efforts on prototypes in resin, polymers, or other plastics. We differentiate from those companies by focusing on our niche market of those in-house PCB printing using a combination of nanoconductive and dielectric inks. And to the best of our knowledge, our additive manufacturing system is the first and only of its kind. And there are no three-dimensional ink injection printers that print multi-layer electronic circuits for the purposes of in-house PCB prototype development. And our strategy for continuing to increase our stronghold on this market, we have a razor and blades business model. So basically, we have our own base of printers with our own ink, and customers buy the printer first, and then continue to purchase the dedicated inks and maintenance over time. So as the installed base of systems grows, so do our recurring revenues from consumables. And our goal is to expedite growth and advance our breakthrough technologies and commercialization efforts. To achieve this, we plan to increase sales through advancing our commercialization efforts and infrastructure, increase the amount of use cases and applications for advanced electronics in automotive, aerospace, medical devices, and defense, form alliances with industry leaders, capitalize on our nanoconductive and dielectric inks and software technology products, and mergers and acquisitions. Our merger and acquisition strategy, we focus on acquisition targets that either expand our go-to market channels and give us exposure to vertical markets, or have transformative technologies and products that complement our roadmap. And just looking at a couple of these acquisitions, one acquisition that we made as of April 2021 was DeepCube for about 70 million. They focus on research and development and deep learning technologies that result in improved deployment of AI systems. And that has use cases in semiconductors, data centers, and edge devices. And DeepCube, what they do, they basically provide the ability to use deep learning without the traditional constraints of compute, memory, power, latency, performance, and scale. And we also acquired NanoFabrica for about 60 million. And they have developed a machine that uses 3D printing tech that prints very small parts with very high accuracy. This is great for microelectronics and micromechanics, and it's one of only a few companies with this capability. And we can also layer DeepCube on top of NanoFabrica, on top of those machines, to improve the process and accuracy the more that we make. And they already have 3 machines with paying customers already. And combined, these 2 acquisitions provide a great synergy for Nano Dimension strategy and product lineup. And if you don't believe us, just look at what some of our customers say. You might recognize some of these. Samsung, NVIDIA, Neuralink puts the industry a mold within 1 hour that has a 1 micron resolution. That is a game changer. NanoFabrica's tech could be a game changer for us coming from NVIDIA. And also we see Neuralink that's also given us positive feedback. And just taking a look at some institutional ownership, we have Arkinvest, who is invested in Nano Dimension, Citadel Advisors, Jane Street Capital, Renaissance Technologies, State Street Global Advisors, and Susquehanna International Group, just to name a few. And just in Q1 alone, we had a 44% increase in 13F filers holding Nano Dimension, a 152% increase of 13F filers increasing their positions in Nano Dimension, and the total calls held by 13F filers increased by 156%. So we're seeing that institutions are starting to step in and support the stock. And just to give you some brief financial highlights, total revenues from January 2018 to March 2021 are 16.4 million. We have $1.47 billion in cash with no debt. We have over 50 million invested in research and development over the past 6 years. And we have a strong trend of gross margin improvements, which is currently sitting at 35.15%. And our debt to equity ratio is 0, of course. And as you can see here in this graph, you can see our gross margins improvement and our EPS improvement over the past 4 or 5 years. And just to give you the benediction, to summarize it all, the 3D printing market is still in its infancy stages with strong potential to flip the traditional manufacturing process on its head. And we are in a prime position to benefit from this transformation. The niche market that we target really has no true competition, and our strategic acquisitions have only added to our stronghold in that market. And financially, while we are still incurring operating losses, we have a strong cash position with no debt, and we do not see any risk to our ability to fund our operations.
You rush the rest of the time?
Yeah, I'm good.
All right, save us.
So I'm not sure I did it fast enough.
Yeah, no, you did good, man. There
You
was
did
a lot
real
of
good.
information in there. There's a lot
Especially
of
by
information
yourself.
in there. That's facts. David, you ready to give the yin to that yang?
Yes, sir.
Make sure y'all paying attention too, because as many people that's in the chat, I better see that many votes for the survey. Go ahead, David. I'll start when you start, bro.
All right, so I'm here to give the bear case for Nano Dimensions. I'll be going over a lot of the objective measures to prove my bear case. So yeah, let's get into it. So here's a nice friendly letter from Nano Dimensions that they wanted me to send to the Come Up Cousin, just to give you some information about them. I'm not going to read the whole thing. I'm just going to focus on the yellow because I think this is really cool that they put in the note. First thing is that we may not be able to successfully scale up their commercialization. That's interesting. Next, we may not be able to improve the technology used in our current systems. It's great for a tech company to hear. And then next, we may not be able to successfully manage our plant growth and expansion. So that means they will probably not be in the next diffusion of innovation model. So the company, in terms of Nano Dimensions, it occupies a specialized niche within 3D printing industry, and a niche that's based on proprietary ability to create, as the bull case said, 3D printed circuit boards and similar devices. Their target audience is the market that looks to smart electronic devices that use printed circuit boards, connected devices, and products of IoT. So they essentially are creating end devices such as that Dragonfly to create small devices within the supply chain of other industries, right? So if a company has to make circuit boards for something they make in the technology industry, well, that Dragonfly printer was basically 3D printed for them, right? So they're trying to create a niche for that. Not that there's already a need for it. They're trying to create a niche within something already, just to give you context. Their executive team, as we heard from the bull case, is very well versed. All of them have backgrounds and industries within this space. And that's cool. There are a lot of CEOs that have a lot of vested interest, experience, and expertise within companies, but doesn't always mean that that's directly correlated to the company doing well. And I'll give an example of that later in the presentation. So let's go into their revenue. Their streams of revenue is three-folded. 64% of their revenue comes from the selling of the Dragonfly printers. 19% comes from the selling of proprietary inks that work with the printers, right? As we heard in the bull case, it's really cool that they have their own ink that goes with their own printers. And then also the 16% comes from their software. One thing I wanted to be noted is that the company continues to be linked exclusively to successful prototype stories, right? We hear these stories rather than a broader adoption in the technology for mass adoption. And we'll see in the numbers if it is mass adoption, right? Usually, if there's mass adoption within a company, then that means that there's high demand. There's high demand, and hopefully there's supply to meet that. That gives us what? Appreciation and value. So we look at total revenue. One thing that you can see off that is that the total revenue is really inconsistent. And that's no bueno. And then also we see that the cost of revenue is inconsistent. Now, one thing someone would say, well, hey, well, in 2020, their cost of revenue went down, right? That's cool. They're not spending as much money, right, for what their revenue is. But also, it's not that great because their gross profit margins are lower as well, right? So we take their revenue and take out the cost of the revenue. That's how we get gross profit margin. Gross profit, and then we get the percentage of that. That's the gross profit margin. And again, that is even inconsistent. And that's not what we want to see, because we know that in 2020, for many tech companies, there was a high demand, and that gave an opportunity for them to meet that usually led to an increase in revenue. Now, this is year over year. Now, someone will say, well, David, that can change quarter over quarter, right? We don't have 2021 information yet. Well, if we do go to quarter over quarter, in September of 2020, things are still on the decline. No bueno. Here's a visual representation of that. As you can see, this blue line here shows their earnings. Their earnings have decreased. That's a downtrend. Their revenue has also decreased. Actually, it's gone flat, but there's a red flag here. Somehow their free cash flow is increasing. I wonder where that's coming from. Where does a company that's not profitable get free cash flow? There's only one of two ways. And they weren't bailed out, because typically companies that get bailed out have to show really good financials to show that they're eligible to receive backing or being bailed out from a government or financial institution. Those no different than us trying to apply for a credit card, right? We have to show a good credit score, right, to get approved for that credit card or that limit, right? This company doesn't have the financials to do that. And we see it here, right? Their operating expenses. I'm only going to go into SGA and R&D, but the other ones don't pan out as well either. As you can see, more than triple of their revenue is made up in S&G. And then their research and development is also 3 times what they made in revenue, right? The whole point of a company is to be profitable. How can we be profitable if we don't have really good business operations? The best tech companies have good operations. Well, in their defense, they're a newer tech company. Well, let's say we give them that pass for now. So another thing that I would like to go into is that usually for research and development and R&D, you typically will see an increase or a consistency in what that number will be, right? The reason that is because from a research development standpoint, an SGA standpoint, you wouldn't want another company to come do what you do and they have more money, right? That's the easy way for you to get bought out. If your SGA is really low, which means that you're not paying good wages towards your employees, your marketing isn't very high, all it takes is someone with a bigger ecosystem to come do your job better. Same thing for R&D. And for a tech company, we can see that what their R&D from 2017 is actually decreased. How do you create innovation within a company that doesn't innovate? Well, they told us before that they weren't going to have any growth or expansion, so it's understandable. Going into operating income. Their operating income is negative, which lets us know that they're not even operating at a profit. And that's okay. It took Amazon 14 years to become profitable. It took Tesla until 2019 just now to become profitable. So again, let's give them a pass. They're a new tech company. They're just getting involved in the industry. But there's one thing that these companies always show. They show the ability to innovate. And this company, number one, isn't even innovating in the risk factors that I showed in the first slide, but also in the fact that they're not able to in the appropriate research and development. And then one fact I would like to give is that companies, in terms of that use PCBs, which are printable circuit boards, right now, currently, you can print millions of circuit boards for a few cents in a couple days. why would a company invest 200,000 plus for a 3D printer when they already can do it at a lower operating cost? It heeds no benefit for a company to invest in a 3D printer when they can already do it for cheaper. They wouldn't want to have bad operations like Nano Dimensions. That would defeat the purpose. And then more than anything, those current devices that many companies use, they use chips. Well, think about that. We're currently, some people say, and did go through a chip shortage. So you're letting me know that in a space where there was a chip shortage and you had a company that can fulfill the need of 3D printing, they still couldn't scale? Well, that's no bueno. In terms of inventory and net income, usually for inventory and net income, we want to see a rising correlation. That lets us know that the company can meet the demand, right, in which is needed for them to profit. So and inventory is increasing, net income is increasing, that's good. That lets us know that when there's demand, they have the supply to meet it and it become profitable. Well, we see here an inverse correlation, right? We see a positive or a consistent maintenance in terms of inventory, but net income, we see a decrease in the net income. That's not good as well. And then we're gonna go into two ratios. Typically when you're looking at debt to equity ratio, as the bull case said, is 0. Cool, but again, the point of a business is to be profitable, right? And to create equity for shareholders, especially when you're an IPO. Now, if they're a private company, that's not really something they would have to worry about. But since they are IPO, typically companies would like to give value to their shareholders. So yes, they do have a zero debt to equity ratio, but that calls into question, if a company is not profitable, how do you have 0 debt? We'll get into that as well. So when we're talking about these 3 ratios, if we can compare them to a company in the same industry, and I use Proto Labs as an example, we can see that their return to equity is a negative 7.2 for Nano Dimensions to Proto Labs 7.5%. This shows how well a company is making good use of retained earnings. This will make sense. They don't have any retained earnings, which is why they don't pay a dividend. Right. In addition to that, they do not buy back shares. In actuality, they've been diluting shares, which is why they have 0 debt, is because all they've been doing is eating off their shareholders. And in terms of their return on asset, not generating any profits from asset, which is why there's an inverse correlation in their inventory to net income. They're not profiting off their inventory, which is their asset. Here's just a visual representation of that. If we're looking at them in terms of their industry, they're actually last. They have the smallest market cap. And as we heard the bull case said, their market cap is supposed to increase to 4.65 billion by 2026. Well, their current market cap is already 252.5 billion. I'm sorry. If that's the case, they're already half the market size of the current industry. And that's not very likely for a company that's not able to produce revenue. In terms of their cash from investment and cash from operations, this isn't good that they have more money from their cash flow from investments than their cash flow from operations. Usually when a business operates, they should operate in a profit. Well, we already know they're not operating profit from their net income. More importantly, the fact that their cash flow from investment is higher than their cash flow from operations lets us know again that they're eating off of shareholders. They're not eating because they're a profitable company. Right, if we're doing a bull versus bear case, the whole point is to invest in a company with a bullish sentiment to profit. In terms of their capital expenditure and the depreciation, well, usually your capital expenditure is what you pay to keep things afloat within the business realm of what you do, whether that's investing in the property, machines, so forth and so on. Well, here we see that their depreciation is actually decreasing and their capital expenditure is actually going down, which lets us know they're not investing back into the business. So you're not innovating in terms of R&D, and they're not even investing in terms of the hard assets that they do own at hand. Again, their dilution of shares. You can see that outstanding shares has increased, which is how they have their 0% debt to equity ratio. And again, their treasury stock shows that they're buying back shares. Usually it's shown as negative because that is an expenditure, it's something they have to pay in order to get those shares back. But think about it. If I'm diluting shares and buying back those same shares, it's a finesse. They're not really doing anything. And then from a technical analysis standpoint, They're significantly underperforming against the S&P 500. And then if we look at their chart, right, I don't see any institutional adoption here. This is a consistent decline in the stock. And again, their market cap is $2 billion, and the overall market cap of the industry is supposed to be $4.6 billion by 2026. Well, if they're only at $6 a share and that's their market cap, they're overevaluated. If they're technically more than half of what the market will be in 5 years, that doesn't add up. But again, let's give them grace, right? Let's say again, many companies are not profitable in the genesis of them starting out, right? But companies that are great look very different in their genesis. We use Tesla as an example. You can see a consistent base being shown in an upward trend of their stock, right? The stock usually tells a story, right? This tells a story of a company with bad operations that's not profitable, right? This shows the story of a company that has innovation and R&D set into what they're doing. It has the ability to profit once there is institutional value, and also once it becomes mainstream. EV has always been around, right? But EV is just now becoming profitable, right? Nano Dimensions doesn't look like that. It doesn't show that they're able to be profitable. And yes, they are a part of the ARK fund, which is the reason why you should invest in this through ARK, not directly through this company. ARK will give you the appreciation we need in terms of evaluating and investing in the industry. But I wouldn't invest directly with the stock. And if you do invest, I will invest in the stock side instead of the option side long term. The reason why is because you don't know how much time it's going to take for it to become like this, looking like this. So if you hold the stock, you don't have to worry about theta eating at your potential to be profitable. Thank you.
Very nice.
The rest of your case?
Yes, sir.
All right, cool. So now we've heard both sides. How you felt about that so far, AJ?
I like it. I like how both, parties presented their information in their cases. So I'm looking forward to the rebuttals, man.
Yeah. We're gonna see how this goes. So now we're gonna do the 3 minutes each rebuttals. I'm going to have the alarm set up, so if you try to go past the 3 minutes, you will be muted. I'm just letting you know that now. It's no disrespect. Whenever you start, Vic, I'll start the timer.
All right. So I know you said we talked about our quarterly results and things of that nature, but we don't focus on quarterly results. We focus on acceleration of the upside potential that we have with our industry, right? We focus on the long term, right? We're not worried about quarterly results. It's almost like a biotech, right? We have a biotech upside, but we're protected from the downside because the way that our structure is, we have different stages in our process development, right? By the time you buy a machine, even if our next stage fails, you still have recurring revenue from those inks, from that software that's coming in consistently. And I know you said, why would they switch over when they already can do it for days? Well, would you rather do it in days or do it in hours? I'd rather do it in hours. And on top of that, everybody loves ESG. It's a lot less waste with 3D printed products. That's a lot more upside for that company if you can help them be environmentally more efficient while also improving production efficiencies. And I know, I know the risk said we might not be able to scale. There's going to be difficulties. Everybody puts that in their statements. You have to put that. That doesn't mean that they can't. And if you look at the leadership team, they have that proven track record where they've been able to grow companies from small beginnings to a much bigger player in the space. So I'm not really worried about that as much because I feel like with the team that we have and the people we have that's leading the charge, I think that they'll be able to execute on that mission. And on top of that, as far as prototypes go, everybody starts off with a prototype. Tesla started with a prototype. You had to have something. You got to start somewhere. But again, I think that our leadership team will be able to scale that. And I think as the 3D printing market starts to gain traction, those prototypes will turn into mass-produced machines, and we'll have a lot more sales coming through with that being there. And then, of course, our niche market being really the sole player in that market, who else are you going to go to? There's nobody else there. You want PCBs and you want to be more environmentally efficient and have the process time cut down, you really don't have any other choice but to go to us. And really, it's like, if you're betting against us, you're almost betting against the future, right? We know that 3D printing is coming. It's not a matter of if, it's really a matter of when. So, betting against this company is almost like betting against that future, which we see how that plays out, time and time again. And that's really all I got.
All right, cool. David, I'll start the timer whenever you're ready, bro.
So I'm happy that you hit on your great CEO and president. Because again, as I said earlier, there are many CEOs that have great niches within their experience, but it doesn't lead to a profitable company. And I'll give you an example. Evan Williams, for those who don't know, is the co-founder of social media giant Twitter. He founded a company called Odie, which was a podcasting platform. But guess what? Apple created a podcasting platform and it failed. Again, he's the co-founder, CEO of Twitter, right? He has experience within that, right? Social media and growing companies. But it's not just a CEO that equals a great success when it comes to company. It's a business structure. And again, he is correct. Invest in the industry, invest through the ARC fund. He's 100% correct. Don't invest through this company. Again, he said that it's about the long-term and growth. Well, if that's the case, then why is there only a compound annual growth rate of 6%? That's the growth rate of a value company. We're talking about tech company, by the way. We're not talking about value companies such as Coca-Cola, where there's not much innovation needed because, right, they bring in so much money in terms of free cash flow and what they do that innovation isn't necessary. Same thing as the airline industry, right? There's a hard ceiling on this company in terms of what they're able to do. And he showed the chart that showed an increasing profit margin. Well, if you brought your eyes to the right side, you'll see that those are negative values on that. So yes, they are increasing, but they're coming from a negative starting point. And there isn't much innovation within this company, though there is innovation within this industry. He said, who else can you look to? Well, Prolo Labs is a company I just brought up and you can invest in, as well as the other 5 that had a bigger market cap, more sales, more revenue, and actually have a net income that is positive and not negative. So he is 100% correct in terms of industry. But again, we're focusing on nano dimensions. If you focus on nano dimensions, it is not the company which you should put in your equity. And if you are investing in it long term, you won't get a good return on your money. And ARC only has a 5% investment in it. I'm sure some of you probably hold a couple weekly options as well. You know you don't really care much about it. Same thing with the stock. It's not really going to get you the bang for your buck you need if we're talking about putting hard-earned equity into a stock. And the last thing I will say is that they own their own printers and their own ink, right? That's a huge moat for them. But the thing is, no one's buying it, right? They are not able to meet demand or meet the supply, right? They don't have any demand, any supply, which is why we saw in this chart, there's depreciation of an asset. And it doesn't even pay a dividend. So guess what? You get no yield or you get no equity in the stock from owning it.
All right, right on time. So now we've heard the initial rebuttals. Now we're going to do 2 minutes. Vic, I'll start when you start, bro.
All right, so when you said we're not really innovating, the market ain't really growing, cool. That's why we got DeepCube. We don't have to stay in that market. That's just the start. We could take DeepCube, apply that to nanofabrica, apply it to our machines, and we can go into other markets as well and penetrate those markets. And with that technology, we're able to flip that on its head, like literally flip the manufacturing process on its head and take over that. Like, I know, I get it, right? Bigger company come in, they can do what you do. Cool, I get that. But at the same time, they got to do it in time to where they got to do it before we get that traction, right? And I think that by the time that we get that traction, it's probably going to be too late for those other companies. And I honestly don't see why. I don't think they're going to be that interested in it because they're probably thinking it's too small, it's too this. We have that special niche, and I think that niche is very powerful. I don't think that it's really much of a risk in terms of competition. And again, you're talking about Proto Labs, they're not really doing what we do. They are in that same sphere, but they're not really doing exactly what we do. They're a little bit different. But again, like with that deep learning, DeepCube, I think that actually expands our TAM even more than what you saw in the presentation. I just kind of left that out. Like it's really more than that, because you can apply that to multiple applications across multiple industries. You got dental, aerospace and defense. Like we're just talking about PCBs. What happens when we start manufacturing other items for other industries? Like then all of a sudden that goes from a 6% compound annual growth rate to close to 20%, 30%. You see what I'm saying? So I think that, it's very forward-looking, right? I agree with you. Like right now, it's a little tough, but it's a very forward-looking investment. But I think that the future is very, very bright for this company.
Boom. All right, 2 minutes on the clock, David.
That's the same mistake that Intel made, thinking that they can vertically integrate, right, when they can't innovate. Same issue we saw there. And more than anything, let's say they do buy merger and acquisitions, right? That will eat into their one profitable thing. They have a bunch of free cash flow and zero debt. Well, guess what? In order to buy those companies, they're going to have to do what? Dilute shareholders' equity by selling more outstanding shares, right? And then also taking on the debt of those companies. Well, the two things that you had going for you, you just killed. And then the time it would probably take to vertically integrate those companies, right? You're going to be having to put more money into R&D, which again leads to bad business practice. This is not what good companies do. If anything, you vertically integrate from in-house like Tesla has done. You come up with your own innovation and you continue to pour time and energy into improving your business operations without diluting shareholders' equity, right? That's a huge part. And that's the part we have to make sure we step away from. Let's take away the innovation. Let's take away the industry. You as an investor, how do you get equity out of this? When you invest in companies, you get two things, appreciation and yield. Appreciation is the upward value of the asset moving up. Yield is some type of cash flow. Well, let's think about it. They don't pay a dividend, so you get no yield. There's no appreciation in stock, you don't get that. So the only way you can get some type of appreciation is to do puts on this company. So that's why I would suggest you to do. Probably play some puts, because there's no long-term growth for this company. If anything, put some calls on that ARKX ETF. Think you'll get better return there.
All right, gentlemen, this is y'all last minute. Say what you got to say to sway the crowd. I'm going to put the poll up. It's your last chance to get whatever your last little piece in. So, make sure you get your vote. I'll start when you're ready, Vic.
All right. Okay, so I get it, right? We dilute shareholder equity. But again, I don't honestly think that's a huge issue. Like if it's a very early company, I think that they still have, again, the management team. I think they'll be able to execute on that. Like, yes, as an investor, you might be hesitant to invest in a company that does that. But if you're looking at the future, which we are forward future thinking people, right? We are investors, we look towards the future. That's where you get your yield from. You don't get your yield from, oh, it's diluting right now. You're not worried about that. Worried about what's going to happen 5, 10 years from now, right? You said, let's buy shares. Okay, let's talk shares. If we're talking shares and we're talking about this industry, then we know that this industry has a very bright future. And we know that, this company is very well positioned in this industry, regardless of what the financials look like. As the industry grows, the company will grow with it. And I think that that's something that we got to focus on beyond just the, dilution of shareholder equity.
Boom. Bulls have finished their case. David, I'll start the minute clock whenever you're ready, bro.
So you said that you guys had 61 sales between 2018 and 2020. That doesn't show a demand. You keep talking about long-term. If you're telling me that this company in the chip shortage cannot take advantage of the demand that was available there, and even now after they're still not able to be profitable, I don't know when there's a time that will be. And then most importantly, I just wanted to say that Nano Dimension needs to demonstrate a more successful penetration within the printing circuit board industry by breaking out of its current evaluation and positioning towards prototyping tools, and transcends to a more instrument that can value mass adoption. They don't have mass adoption. They're in niche spaces. In order for them to be profitable and come out of being negative or in the red, right, they have to show that they can be profitable. They currently can't do that. Again, you keep glossing over the shareholders' equity. Why, as a person, will I invest it from getting no return on my own equity?
All right, y'all. The poll is in the chat. Make sure y'all put y'all vote in for who you think won and show these guys some flowers too, man. That was a real presentation
Good
right
one.
there.
Yeah, that was a
Yeah,
good one. The back and forth and everything was good, man. I like that one. Very
yeah.
informative too.
Facts. That's one you could use to go look at, new stocks that's on the SIP list and kind of break them down, whether that be the balance sheet, whether that be the addressable market that they have. These guys did a good job of explaining bits and pieces that really haven't been explained before on Sector Sundays. So if you need to use this as almost like a use case to go back, you plan it, write it down, whatever you trying to look at on the new stock that you researching, and then pause it, whatever, go back and forth. But no, salute to y'all for real, because that was very helpful, very informative. Did you have anything else for the people, AJ?
Nah, man. Like I said, just always be careful. It's gonna be an interesting week. So make sure y'all just be careful and don't give your money back. I know a lot of y'all got some AMD profits, so make sure y'all secure the profits, man. That's all I ask, man. Just secure it.
Do not make no donations to the market. David, Vic, y'all got anything for the people coming up this week or just in general?
No, stay safe.
Period.
Yeah, I ain't got that.
Wash your hands.
Man,
So
wash your hands.
Here.
Wear your mask. People getting real comfortable without the mask. I ain't gonna lie, I went to a couple spots maskless, but nah, I'm cool on that. You feel me? I gotta, stay strong out here. But yeah, make sure y'all being safe.
Make sure your kids wear their masks. They're going back to school and stuff.
So school starting. School starting. Make sure you got them masked up, taking their Flintstone gummy vitamins and all that.
They used to love them chewables. Quit playing.
Man, it wasn't doing not a thing for your immune system. But yeah, so the SIP list did come out. We haven't had a come up episode yet to kind of go in detail. So I do encourage y'all, for some of the new picks that's on there that you're not familiar with, do a bull bear case on them. For the STT, CACI, Hood is on there even. Do a bull bear case on it and figure out what's why is this on the list? Is this something I should invest in? Is this something I should play puts in? Is this something I should go long with? Is this something I should go short with? Figure out some of these things, because FT&T was on the list last time. That mug hits a 52-week high basically every week. You feel me? And I don't know about y'all, but I passed right by that at the cookout table. Like, I was looking at the macaroni and cheese, didn't even see the yams in the corner over there. You know what I'm saying? So that kind of, flew over my head. So every night I've been trying to dig deep into one of the new picks to try to figure out, okay, what does Mark see in this one? Is this something that I'm interested in? Just so I can make sure I'm at least taking the time to taste everything that's on the table. You feel me? Not being too picky or, whatever. But yeah, outside of that, y'all got this case next week. Like I said, if you missed the beginning, we're doing Coinbase. It's going to be Leah, Dave, Lori, and Sam. Whoever wins that will be going to the finals. So just make sure y'all tune into that. It's going to be a good one. I know Coinbase is a popular pick. But outside of that, man, I don't really have anything else. We could go ahead and get up out of here. Again, thank you, David. Thank you, Vic. Always thank you to you, AJ. And y'all be safe, man.
Bro. Peace and love, y'all. Make sure y'all vote.